Hey, what's going on, everybody? So, I just wanted to come to you live with the week of breakdowns. I know it's been minutes since I've been on here, but just wanted to kind of get back into the swing and flow of things. And I apologize for not being as active on the charts as I have been in the past couple weeks. So, uh, want to come on here and just kind of do my normal breakdown of what I think is happening in the indices and futures currencies space. And just again, the breakdowns again. If you guys, you should know me by now if you're on the channel, but it's Brinks Trades, aka Blake, and yeah, I've been doing this for about 10-ish years or so. But um, basically started in the forex space, but the future is not kind of trade a combination of currencies and indices, but really just anything with volatility and charts. So I want to go ahead and break down what I think is going to happen in the markets this week, and yeah, we'll go ahead and keep it from there. I did make an announcement in the chat that I potentially might be moving to London session to trade, and with that comes more of a focus on currency futures, not necessarily because currencies are better than indices or there's anything going on right now. Just with my personal schedule, it might be the only time that I have to really be on the charts. So again, want to kind of talk about that, but let's go ahead and get into the charts. So we're going into the last week of the month. We know that Sunday is the end of the month, or end of Sunday is going to mark the last week of the month. And so with that, a lot of times we expect the market to kind of run counter trend to where it's been for the last month. We have had a bullish month, right? If you look at the month here, we did come up, kind of run consolidation above this. I'm going to go ahead and get rid of some of this. Run consolidation above some of these highs, right? And you can see here that we've ran 1, 2, 3 times into this old high. I do expect the market to continue to drop at some point, right? And so this month, they literally just ran up and ran the high of the last quarter, really. If you look at the last 3 months, this pretty much just took out the high of last quarter, and really is traded back into this overarching, imbalance there. So, what are we expecting in the next few months? I don't really necessarily know, but I will say that long term, this month has been bullish. So wouldn't be surprised if we did retrace back into this, this gap, maybe even retest this imbalance. There is a volume imbalance sitting here on the weekly level at 98.53. So we might not necessarily see that happen. But we could retest this level or trade back into there. But really, there's been consolidation. We've really pretty much been in a chop since June of last year. So we're coming up on a year of just chop, right? This is 2025 right here. But really, the last 6 months, 8 months have really just been chop, us running levels here, taking out the low, and then running higher. So what do I expect to happen? Don't really know, but I'm leaning into this potentially with a bearish bias where the market could trade back down for the week, not long term. Again, just a lot of chop going on here. We did take out this high and really failed to stay above this old level here at 99.27. So I think the market really, again, is just running around looking for internal liquidity. So you got two options when this happens. You could either trade within the lines and go to a smaller time frame and really look for key levels of liquidity that the market can run, or just stay out until you get a better sense of the overall daily trend, right? And that's kind of where we're at. You can see that the market is starting to give us higher highs though, right? And this could potentially be a more of a bullish run, but we also could come back here too. So again, that's not too clear, but that's kind of where we're at with the markets right now. If we go to dollar, we can see a little, or sorry, if we go to euro, we can see a little bit more of a kind of a clear trend somewhat. We can see here that on the monthly time frame, if we jump up one, we can see that the market traded back down into this overall zone here, ran these highs, and we're currently kind of sitting in that range right there. Let's see. So the 4-hour time frame, daily time frame, we did have a couple of things happen. So we did run these levels here, and this is the level that I actually called out a few weeks ago in the chat. You can see the market came down here, took liquidity off of this levels, but we still have this huge imbalance here, right? So we see a volume imbalance from this gap to that, from this close of this candle to here, right? So I'll mark that from that high to there. And then also in between that, we have, another volume imbalance from this drop, from this candle close, this open down here. And then obviously there's a fair value gap in between these things. This whole zone is really marked off as an area of interest. If you see here, we did have 1, 2, 3 drives into liquidity and then broke structure. Ideally, I want to see the market continue to run into this gap and then run lower. That's the long-term play. What I'm looking for in the next week or so, I mean, if you look here, we've seen the market really start to give us, find an area of quote unquote support, right? So the market is starting to give us higher highs, and this 4-hour trend is broken to the highs, right? So potentially what I want to see here is for the market to uh potentially fall in line, maybe run some level of buy side here, whether it be the high of the month, which I think is actually the high of the month is here. We could come back all the way up here, run that whole high, and then run lower, or we could take one of the levels here. I could definitely see us run these two prominent highs, which are the highs of their respective weeks, to respect consequent encroachment, and then go start to break structure and go back down. We're playing a long-term game here with currencies, so we definitely want to make sure that we do stay cognizant of the overall bearish bias here. But if we do find an opportunity for a short-term rally on euro, then that could be something as well. So let's look at pound here. Pound's pretty much the same thing. It's just a little bit more choppy. Again, going to the daily time frame, you can see that this market has been in a state of really just consolidation, but leaning bearish, right? So if we see this here, we can see the weekly time frame. We can see the market has ran this high, inverted this gap here. When it inverted this gap, I kind of knew that the market was going to want to run lower, right? And so we've seen the market drop down 200 points from that inversion. And ideally, what I want to see the market do now is really continue to run lower. So if we kind of forget about this inverted fair value gap there, but then start to look at the right, which is this price action, this price swing here, you can see a couple levels. You see that fair value gap right there. You also can see, just a cluster of volume imbalances. So you could look at this from that low, or really from this low to that open, right? And then another one from this open to that close, right? And so you can see this zone right here has really been respected as an opportunity for the market to run liquidity. Anybody kind of in their right mind is looking at this from a bearish point of view, right? Nobody's looking at this bullish. And I actually like this more than euro, because euro, you can still make the idea that the market is still running bearish. I'm sorry, you can still make the idea that the market still wants to run higher. Here, this is a little bit more solid, and it's a little bit more leaning into the idea that the market is rejecting from these levels. So shorting this would be the most optimal idea, right? So ideally, what I would love to see here is, and just kind of identifying what these levels are here. This was a daily volume imbalance, or daily fair value gap. If I go back here, you can see it. Or sorry, weekly. But I'm gonna get rid of it so we can focus on this. But this is just a weekly, monthly level here. You can see that. And then again, we go monthly. You can see that monthly fair value gap there, right? So we ran through this, respected it, and honestly, on the monthly time frame, haven't really cleanly broken structure yet for a long-term bearish run. I still think that dollar is going to run lower, and I think euro is going to run higher at some point. I just don't see it happening like this month or this week. I could see us definitely running lower, taking this level, and then potentially looking higher. So ideally, again, we're still in a bearish mood, and you can't trade straight off the monthly time frames because they are so big. The time frames are so large that it just gets really hard to uh, really actively take a position, especially when you're trading futures and you can't really hold positions. If you're trading off the with spot forex, then it's a little bit easier for you to like swing trade and hold positions longer and kind of trade based on higher time frame ideas. But if you're trading a market that closes its trades out at 5 p.m., you kind of have to get out. So, um, excuse me, especially like with Trade of 8 and stuff like that. So, ideally here again, I want to see the market run lower still. So what does that mean? Well, we need to confirm that the market has a bearish structure, right? And starting to see sell side liquidity. The hour time frame, we're getting that, right? It's awesome. But I would feel very confident in the idea that the market wants to run lower if we invert this gap here, right? If we can invert this gap here, and I'm just going to make a note that says want to see inversion. Then the market is going to let us know that it's time to go run lower. So got to see how this plays out. And I'm just going to make this orange so we can see this. But ideally, I want to see the market run through this level here and then continue to run lower so we can potentially run, to the lows that are called out. If we see this market, this level of respect, doesn't necessarily mean I'm going to buy this, but it just means I'm probably going to stay out. Again, I'm being very cautious, especially honestly over the last month or two with everything that's going on with currencies and things like that. So I would imagine that this has the potential to, potential to run lower for sure. But we'll see. Let's go ahead and look at the indices. Start with YM, mix things up. Out of all the indices this week, I think YM is actually the one that I like the most for it to continue to run lower. But again, at the same time, I'm not really a huge fan of what's going on with indices. So we came down here, inverted this gap. So this is basically what we called out. I said, hey, I want this market potentially run lower once we inverted this gap, came back through here, rejected, and are running lower. Right now, again, mind you, keep in mind everything that's going on geopolitically, right? With certain countries going against each other right now. I don't really want to talk about that on stream, but again, the market is bearish, right? So this looks like a minor correction. We did come down here, run this level of sell side, and then wick here. So we could be experiencing a kind of like liquidity sweep before we start to run back up. I don't really know that to be 100% true just yet. You need a little bit more confirmation. So ideally, I need the market to give us a good clean breaking structure. I mean, by maybe taking out this high, would set the trend for that. But with the news that potentially we might be putting boots on the ground in Iran, there's a really good chance this market's going to continue to run and dip lower, right? And so I would imagine that the market is potentially wanting to seek levels of sell side, and I would be looking here. Really would be looking here. If we look at this on the weekly level, I could definitely even see it coming back down to this level here, 45,015. Why this level here? Well, if you zoom out, you can see this is kind of like a level of trendline liquidity here, right? That low resistance liquidity. Maybe even taking that low there, 44,000. I don't think we're done with the bearishness. This is very gappy price action down. I think we're going to keep running lower. But again, it has a lot to do with what's going on in the world. And that's one of the reasons that I'm not necessarily the fan of the indices as much, because they are so reactive to what's going on in the world, whereas currencies are usually more based on interest rates and FOMC and that type of thing. So let's look at ES. ES is the same idea, just choppier. I don't even want to trade ES. because it's so choppy, and Nasdaq is the same way. But ideally, I would have to imagine that we're still gonna try and run for lows here. So I like these this level of equal lows here that's sitting at um 6,358 for it to keep running lower. But again, we did have a liquidity sweep under this low here, which is also the low of the month, was the previous low of the month until we swept it out. So I could see the market potentially wanting to respect that and turn around, right? But again, we need confirmation. We don't have that yet for a bullish run. This looks like a very clean liquidity sweep. But again, same thing as as NAS or YM, we are in a state where the market could drop. I actually imagine the market's going to probably drop with a open today because of the whole again announcement. So um that's what I'm thinking for that. And then Nasdaq, same idea here. This is just chop. This is so ugly. Like it's so hard. It's definitely moving bearish, and so you could technically take a bearish tint to it. But man, this is so choppy a price action that it's like I don't really feel comfortable trading this. And yeah, so ideally that's what I'm looking at for ES and Nasdaq and YM. And so again, I just want to make sure that this is all making sense. And let's go look at gold futures really quickly. Gold futures is in a state of chop after having that crazy run lower the last few months. And obviously, this is just more of a retracement than anything else. Coming back to this area here, you can see here that the market, if we look at the weekly time frame, huge retracement. And I kind of figured as much back to when we came back to this level here, didn't respect the consequent encroachment of that gap, and then ran back lower. I do expect this to kind of find some level of quote unquote support, right? Or a level of liquidity sell side here. But we've had a crazy run on gold the last, this is all 2024. This is 2024 and 2025 is just straight up. So we're overdue for the market Hey, what's up, guys? So I guess I didn't end the stream, but just want to make sure that you guys saw everything that we needed to see. Again, just coming back really quickly. Again, when we talk about dollar, we are looking at the market to want to be potentially bearish this week. Again, end of the month, right? Situation. We are long-term bearish still. We have been trading in this gap. To be honest, I think this is like long-term consolidation where we could run up here, spend some time up here, and then run lower. But for this week, I don't want to over project because we are consolidating. And so long term, you do want to see the market tend to run lower in that. So I would like to see the market trade back into the range, kind of close the month out. We think about euro. Same idea here where we've been bearish this entire month. I could see the market trading back up into this range, potentially closing the month here, or we could just melt, right? But ideally, long term, thinking beyond this week, I want to see the market continue to go lower. G, I guess I could look at yen too, since I didn't do that, but I'll come back to that. Pound, same idea, right? We are bearish here. Again, we could close up the month by trading back into this range, but long term, going into next week, 6B. I do want to see the market continue to run. I'm looking at this level here at 131, which is like a good 100 and something, almost 200 points down. So that could be a level there. And then indices, again, just bearish long term, but they're so choppy that I don't know if I want to participate in those this week. But I am looking to be bearish in everything, given the announcements that have been going on geopolitically and all that stuff. So being on the lookout for that. And then, yeah, I will look at yen really quickly. So I did say I was going to look at that. I'm going to be looking at more currency pairs. Again, this is the 6J1, which is, again, USD-JPY. But USD-JPY, if you're trading the actual spot Forex, I anticipate this to want to run for this high here. This is the level that I want to see the market take, which is that 162.97 level. It's like 300 points out. This is actually a very strong opportunity. We traded down. We were in this kind of wedge pattern, broke out of it, right? Market was interested in running for the higher highs, took this level of buy side here, and it looks like it's still rejecting that level. And so I definitely want to see the market continue to run higher. What does that mean for you if you're trading the future side of things? It means that we want to see the market run lower, right? So that's basically what this means, is that the market take this low here at 0.0062530, right? So that's ideally what we want to see there. Yeah, so that's ideally what we want to see through those. So hopefully you guys enjoyed this. Hopefully you guys got something out of it. Again, stay locked in with me in the Discord. If you haven't, then you're missing on a lot of good info. But I'm going to be more active again, probably during London session over the next few weeks. Yeah, it's going to be focusing on probably more currencies. So appreciate it.